Hey everybody, how you doing? It's Thursday, yes, and tomorrow is the big payroll number day. And I just want to let you know that I did my forecast as I do prior to every one of those releases, and I sent it out to MMT Trader subscribers. If you would like to get that email, and if you are not a current MMT Trader subscriber, then please go to my website, pitbulleconomics.com, and sign up for a 30-day free trial of MMT Trader. Now, I know a lot of comments generated by my video yesterday talking about the tariffs, talking about protectionism. This is kind of uncharted waters. The United States has not taken this path in a very, very long time. And we have signed on to many trade deals, supposedly free trade deals, but I stand by what I said in my video, that if you look at the economies of Japan, if you look at the economies of China, even if you look at Germany, very much built up through protectionism and other devices, impediments to trade, currency manipulation, that sort of stuff. So the concept or the notion of free trade is really kind of a flawed concept or highly misunderstood, because the United States is very open in terms of us, in terms of imports, in terms of countries exporting to us, but it has not been that way in the reverse necessarily. And as I pointed out, when we import, yes, the price in many cases will be lower for that good, but we are not earning the income. The foreign sector, the foreigner who produced it, is earning the income. When we make it here, we are paid to produce that good, so the income stays here. So as an example, if you earn $50,000 a year and the cost of a good is $500, that is 1% of your income. If the price of that good goes up to $625, that's a 25% increase, but your income goes up by an equal amount, 25%. You now earn $62,500. That good costs 1% of your income. So your purchasing power has not changed. Now I know a lot of you say, well, there's not, you don't know if wages are going to go up. In theory, they should. More people being paid here to produce goods that otherwise were being produced outside of the United States, where the foreigner was getting paid. So in the aggregate and over time, again, I've been saying all along that there are going to be short-term disruptions and dislocations, most likely. On that note, however, I noticed an article today that U.S. Steel is now reactivating an idled plant. That's a plant that was kind of shut down and we're not using it. And they're bringing back 500 workers as a result of the tariffs. Now, that's on the steel side, obviously. We don't know what's going to happen on the automobile side or on the consumer side, right? The steel producers, they're getting the benefit of the higher prices. The steel consumers, they're going to have to pay the price. So it's going to take time for this to percolate and find a new equilibrium level in the economy. But, it's definitely a break from, what has been tradition. This free trade has been one of the most sacrosanct policy of the neoliberal paradigm that we basically have been running in for the last 30, 40 years. Neoliberalism, of course, that's mass privatizations, that is the free trade, that is the financialization of everything, right? The growth of the financial sector. The financial sector back in the 1960s and the 70s was a tiny fraction of the U.S. economy. It's a much bigger percentage now, and it produces nothing. I would even argue that the financial sector is a tax on the general economy. It is basically paper shuffling. There is no real asset produced from the financial sector. You know, what is buying and selling stocks? I mean, that is nothing. You're not creating real assets that people need to live or consume. And there's a cost of transaction that flows to the actors within the financial sector. Those are the big banks and the big investment banks and Wall Street, talking about Wall Street. So this is a break, and that's why, you know, you saw the big Wall Street guy, Gary Cohn. By the way, speaking of Gary Cohn, and all this time I'm thinking, God, do I know this guy? Do I know this guy? It turns out that this guy, and we're very close in age, he's 57, I believe, I'm 60. It turns out this guy was a member of the COMEX and the New York Mercantile Exchange back at the time when I was a member there as well. So I might have bumped paths with this guy. Of course, he went on to have a huge career at Goldman Sachs. But I was always thinking, do I know this guy, Gary Cohn? He looks familiar. The name sounds familiar. So, yeah. He was an old commodity trader on the floor back in the day when I was down there. He left, right? He quit the White House because he doesn't want to have anything to do with these tariffs, all right? Because he is a neoliberal. Those are the policies he espouses: Wall Street, privatization, financialization, trade agreements, all that kind of stuff, which has decimated the middle class in this country. It has created unprecedented income and wealth inequality, all right? And this is moving in a new direction. We don't know how it's going to turn out. I mean, I gave you some ideas here. I could be completely wrong. All I know is that a lot of the people who are screaming and crying about this are the same people who were telling us we were going to have hyperinflation from QE. That was not me, of course. Telling us the dollar was going to collapse when the Fed was doing all of its extraordinary monetary measures because they absolutely did not understand monetary operations. Of course, I was saying all the opposite stuff because I have the understanding. And if you go back and if you look at my videos from that time, you know, when you had guys like the idiot Schiff and all those other people screaming, and Jimmy Rogers, hyperinflation, the dollar's going to collapse, it's going to... I was saying, no, the dollar's going to go up. All of that stuff was the removal of income. And now you're having the opposite. Rate hikes, when people argue, oh, that's going to be so bullish for the dollar. Gee, how come the dollar's not going up? I was the one who said it's going down. That's fiscal stimulus. The government's a net payer of interest. When you raise interest rates, they're printing money. Anyway, if you want my email with the forecast of tomorrow's jobs number, and my forecasts are always very, very close to what the number is, go to my website, pitbulleconomics.com, and sign up for a 30-day free trial, and I'll send it to you. Have a great day. Bye-bye.